Aloha traders, Reid here with Hawaii Trading Academy. This video is a breakdown of a Tesla trade that I took that lasted a total of 15 months, netting a total of 33% at the time of close, or just over $10,000. And before I dive into the trade itself, I wanted to emphasize on why percentage gains and looking at percentage gains is a lot more important than that dollar figure. For starters, when we're looking at hedge funds and portfolio managers who are handling billions, they look at percentage gains because percentage gains is comprehensible to traders and portfolios of all levels. To break it down a little more, a 1% gain on a $1,000 account is only $10. However, a 1% gain on a $1 million account is $10,000. So as we are growing that portfolio, we want to begin to start acclimating our minds to percentage gains rather than dollar gains. It doesn't matter how big or small your portfolio is, because in the end, percentage is what is scalable. Thinking in percentage will get you in a better state of mind than a dollar amount. With that being said, let's get into this trade. Let's break it down and show why the power of trend trading works. All right, guys. So this is Tesla. This is back in August 2020 when I first took this position. The first entry that I liked was this descending channel after a small bull run here. So starting from March 2020, going to July 2020, and then it just started consolidating just before August hit in this descending channel breakout. So I got in just as I thought that the ascending channel was broken. I was anticipating this move up. Price was holding the 50 EMA and the 200 EMA. And this 200 EMA is going to be important on this daily chart because that is where my stop loss will be measured by. So first position, it's kind of self-explanatory here. It broke out, created a newer high. I entered on the second position with a stop loss at 200 EMA. Then I entered two more positions here as it rejected the 50 EMA. Third and fourth position here. Got in around $438 per share, followed by the rest of the positions still hovering above this EMA. I really liked during that time how the EMA was just holding still steadfast. And I just kept entering as price just hovered here. I was anticipating another descending channel here for a breakout. Had no money to actually re-enter into this position here. So I just let it ride. So seventh trade, 6 and 7 here, continue to ride. And as price continued to create new highs, I slowly moved my stop loss up following this 200 EMA. As we got to 25th January, new year, we got a new high and then it dropped back down, kind of creating this descending channel here. On the lower time frames, the 1 hour and 4 hours, creating another descending channel just after a small bull run. So I got in one more time for my 8th position in Tesla. At this time, I moved my stop loss. So every position that I'm making or entering the market, I move my stop loss, and that immediately removes the risk. So if the trade completely pulls back against me, I won't have lost as much as I initially entered. And that's what it's all about, is managing our risk, lowering our risk. It's less about making the money because the market will tell you how much money you're going to make. And it's more about letting the market, it's letting the market decide how much money you're going to make, really. And that's where risk management comes in. You as a risk manager, you want to lose less, as least amount as possible. So moving on, I got into the 8th position with a stop loss, continued to manage my stop as either new highs were made or when I entered the market. Entered the 9th position here, still 200 EMA. I liked it. It was a dip. I bought that dip, let it ride, continue on going up. On the 10th position here, broke out, bullish engulfing, right, broken above the 50 EMA, letting that ride. Now, I wanted to state this one. I was going to close this position right here, but literally put my stop loss under this March 5th low test candle. So the overall trend is bullish. I'm allowing this to just play itself out. I'm not freaking out on the intraday moves. I'm just letting the trend, this trend is still bullish. The trend is still holding. It didn't create a new low. So that's why I did take my stop loss, kept it really, really tight here. Move my stop here, same stop loss. So the 9th and 10th position had the stop loss here and here. Stop loss was here. And from there, we got another bull run from September, well, May, from May all the way to November of 2021. So new high, moved my stop loss here. After this big gap up in October, end of October, I started to watch this a little more closely just because it was the new high across the board. I had 10 positions open. I had a strong profit running. All my positions at this point is running in profit. And I wanted to make sure that my profit wouldn't be dwindled. So I went onto the lower time frames, managed this position on the 1 hour 50 EMA. As price gap down on November 8th, the position closed on November 11th. But on that close of the 11th, I did enter 2 new positions, which are still live. And we can see that there's still room to breathe right now. I'm letting this just do its thing. I'm letting the trend either take me in or take me out. I had a nice percentage gains, and we're going to see if this trend continues or if it's truly broken and preparing for a bear cycle here. Other than that, it's a really simple strategy, is just following the EMAs and whether price creates a new high or a new low. And it's simple as that. All right, guys, I really hope you enjoyed that. And what I want you guys to take away from here is I followed my strategy. I let the plan play out without worrying, without looking at the intraday charts every single day and worrying about red days or getting excited on green days. I only entered a market on the EMA breaks or if new highs, or changed my position when new highs occurred. And so that's the basic foundation of the way I trade with trend following. I know it's not precisely what Michael Covell and other trend followers do, but the foundation is trading with the trend. And I use patterns to enter the market. So that being said, trade your plan, follow your plan, stay patient, and let the market take you out. Hope you enjoyed this video. I hope it brought some value to you guys. I hope this helped you understand the market a little better. If you have any more questions, feel free to leave a comment below. I'd be happy to answer them, or email us here at admin@hawaiitradingacademy.com. And we'd love to hear from you, and we love to get back to you. Love answering any questions and fill up those gaps that you may have. All right, guys, with that being said, I hope you have a great day and a great trading week. Aloha.